All right, we're live. So welcome back to Dapp University. So today we've got a lot to talk about in our live stream. The number one thing that is a lot of people have been talking about over the weekend is what's been going on with this Bitcoin ETF rejection, okay, and what you need to understand about this. We've been talking about Bitcoin ETFs a lot on this channel this year because they're such a massive turning point for the adoption of this technology and cryptocurrency as a whole, okay? We're looking at a lot of the new updates that have happened in this space since yesterday, answers some of your questions. We started doing a Twitter poll in the morning about, hey, what do you want to talk about today in the live stream? We're going to answer some questions out of that, answer some questions out of the live chat replay here, and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Last but not least, like nothing I'm saying, this video is designed to be financial advice, and there's lots of scammers down in the comment section below, like posting phone numbers and stuff. Like, I'm never going to contact you and give you my phone number or ask you to invest with me, ask you to join a Telegram group, any of that type of stuff, okay? Just straight up ignore all that. So we got people jumping in the chat here. We got Culture Highs, Automatic Beats, Andrew, Rivelton, hope I'm saying that right. G-Main, Wendy, welcome. All right, so let's go ahead and jump into this. Let's talk about Bitcoin ETFs, all right? So a little bit of context on this, in case you're brand new around here. We've been talking about Bitcoin ETFs and just crypto ETFs in general for quite some time now, a significant part of this year. I think the ETFs are play a pretty significant role in adoption of blockchain technology and cryptocurrency on the whole. So what is an ETF if you're not familiar? So basically it's an exchange traded fund. So this is a way for people to get exposure to lots of different assets through a traditional financial exchange of some kind, okay? You might be able to connect this to other more traditional products like 401ks, et cetera, okay? So basically, like, Bitcoin, so just say that differently. Like if you're going to buy Bitcoin, mostly you have to go to a cryptocurrency exchange, buy Bitcoin and exchange that way. But with an ETF, you could get exposure to Bitcoin through a more traditional brokerage account. Some people say that doesn't really matter. Like, hey, like you can go buy Bitcoin. It's pretty easy to do on the grand scheme of things. But I think it's important for lots of reasons. One, there will be people who want exposure through traditional means for lots of different reasons. Some, like I said, maybe through traditional investment vehicles that are able to include, ETF listings inside those products. Maybe there's tax advantage ways for people to do this. Another reason is some people are just stuck in legacy finance and are probably never going to actually sign up for a crypto exchange. The last big reason is it's huge for the legitimacy of cryptocurrency on the whole, on the grand scheme of things over the long term. So we've seen several Bitcoin ETF applications in the pipeline for a long time. All right, we've seen different types of ETF applications, some for futures products where you're basically making bets on what's the future price going to be. It's kind of a simple way of explaining that versus a more traditional ETF, like a spot ETF, where you're actually just buying something that's tracking the price of the asset as it moves through time, okay? So we actually saw a first Bitcoin ETF approval recently. I believe it was in the past couple weeks, in the past month for sure. I can't keep track of which one's called what, like who did each application and which one got approved. But we do see a little bit of upset on this front because the SEC actually rejects the VanEck ETF that sought to track Bitcoin directly. So this is what I was talking about a second ago. So we have a futures ETF product that has been approved. Some people say it's not really that big a deal. I think it's a big deal because it's a historic moment for ETF approvals in general. It could likely open the gate for more later. But we do see an upset here that the SEC did not approve a spot ETF. So basically, the rationale is that it says the rationale is in line with the previous rejections by the SEC of proposed ETFs that would track Bitcoin directly. Like I was saying, just buying something that tracks the Bitcoin price. Companies including VanEck, so here, blah, 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 blah. They've been trying to release an ETF for almost 10 years, but the SEC has been slow to embrace one, citing concerns about the lack of regulation and potential for fraud and manipulation in the Bitcoin market. Okay, so it's kind of like same story, different day. So yeah, we'll see if we can actually get a spot ETF approval. I haven't lost hope for this yet, but this is definitely a little bit of a setback in that regard. So we'll see what happens. So one of the reasons this is also relevant is I think it has some impact on what's been going on with crypto markets past couple days. Again, I'm not that concerned about short-term price changes in the crypto markets. I have a pretty big bet on where all the space is headed over the long term, and even the midterm, right? I mean, a few months from now. Within a few months from now. But I do think we have some explanation of why we've seen a little bit of bearishness in Bitcoin in particular and other major cap cryptocurrencies. Of course, I've been talking about for a while that we'd likely see a little bit of a cool off, at least a temporary one, simply because things have gotten so frothy. We've been in extreme greed territory in the crypto fear and greed index, seen a lot of leverage in the system, all that type of stuff. So I thought, we're just waiting for at least a minor correction of some kind. It looks like we're getting a little bit of one, okay? And I think that the ETF rejection can have, some impact on that. Price markets always have multiple factors in what happens to the price, but I do think ETF rejection is enough, especially considering the time that it was rejected, okay, to have a short-term impact on what's going on here. At least slow the momentum of a furious, rapid, raging bull price increase. So, speaking of ETS, though, we do have a, let me just make sure I got the date right here. It's the 15th, today the 15th. Okay, so I'm actually making sure it is the real tomorrow. But we do have the futures ETF to list tomorrow. Okay, so VanEck Bitcoin futures-based exchange traded fund ETF is slated to list tomorrow, according to the announcement from the firm. All right, so it's not a total upset from the spot ETF rejection. We're continuing to see listing of futures products. So what do y'all think there in the comment section below? Somebody says ETF good for old timers. Says, what about block ETF? Somebody says this is old news, old news. It's as of Friday. So this happened after our last stream on Friday, so that's what we're talking about it. So what else would you like to talk about? If you want us to have something constructive to say, stick it in the comment section below. Okay, so somebody's thoughts on the Taproot upgrade. Yeah, we'll definitely talk about Taproot here in a second. Yeah, we'll talk about Taproot for sure. Let's look at a couple other things. So we talked last week a lot on the channel because it was such a big deal about the airdrop for Ethereum name service, ENS. So basically, we saw lots of people get like $10,000 about kind of on average of ENS airdrop for the Ethereum name service, basically creating a blockchain domain name / social handle for your Ethereum wallet, your blockchain wallet. And a lot of people received, kind of in the neighborhood of like 200-ish ENS. All right. And if you look at the current price of ENS, tokens, they're $53, so it's about 10,000 or more. Okay, so this is pretty common. I did a poll on my Twitter. That's kind of what people were telling me they received. Seemed to be a pretty common number. And they actually tell you in the schedule about how they release the tokens, so it stands to reason based on their math that seems about accurate. So, and you can also verify this on chain. You could probably calculate all the data about what the average ENS airdrop was if you really wanted to. So, anyways, we've been talking about some strategies for how to find other airdrops in the future. All right, and how to position yourself for those. I actually released a video about that on Friday. Definitely go check it out if you haven't already. But we already see news of another airdrop here. So this is DEX aggregator ParaSwap launches its own token to airdrop 150 million PSP. So I'm assuming this is the symbol for their token. So ParaSwap Foundation is launching native token PSP today. 150 million tokens, or 7.5% of PSP's total supply of 2 billion, will be airdropped to 20,000 early users. Okay, so some 20,000 accounts will be rewarded 150 million tokens. We already saw the numbers here. Specifically, active users on all supported chains will be rewarded with retroactive airdrop. All right. So the snapshot for the airdrop was taken on October 8th. Basically, when asked about 200,000 users who have been selected for the airdrop compared to the 1.3 million addresses that have interacted with ParaSwap to date, basically said users were filtered based on their activity, which specifically who used the platform multiple times for the last 6 months till October 8th. Okay, so looks like it's also doing the same type of thing, providing utility and governance. Sorry, this is pretty common, way of airdropping tokens for decentralized autonomous organizations as a way to distribute tokens to early users. Okay, so we're seeing this type of stuff heat up like crazy. And of course, you can't just go start using ParaSwap now and, be eligible for this airdrop. It's retroactive. The whole idea is to reward people who are early and loyal to the applications. So we talked about that in the video on Friday. It was like, hey, how do you position yourself for this? Well, let's just use a lot of stuff. Go check out that video for sure. It's got all the details on everything that I'm talking about here and how you can increase the likelihood that you would be eligible for one of these things in the future. Okay, so it's not guaranteed. We don't know exactly who's going to airdrop a token. Not everybody's going to. It's not going to make sense for everybody. But I think we're starting to see a growing trend here where, more and more people want to airdrop tokens. Okay, so speaking of decentralized autonomous organizations, that's been a big theme for a lot of these airdrops. Is basically it's a really common theme in crypto when you're creating something that's supposed to be decentralized over the long term to start, at least somewhat centralized. So why is that the case? Well, basically, centralization fixes a lot of problems. Basically, it's really easy to just fix stuff when you have centralized control. Like the central entity can just flip a switch and change how something works. You can make stuff faster by centralization. You can do all the benefits that we enjoy about Web 2.0 technology and everything we have today is basically because it's centralized. They have full control over the thing that we're using, all right? And they can iterate on it, make it faster, all that type of stuff quicker because it's centralized. Now, when you're dealing with blockchain technology, that's like the opposite for something that's very decentralized. If it's very decentralized and there's a lot of different actors that you have to coordinate in order to make it work, and everything's slower at that point, okay? The development's slower, upgrades are slower, the technology is slower, all that type of stuff, but you have this benefit of decentralization. Now, when I was started off this by saying a pretty common pattern in decentralized technology, the life cycle of it is it starts out somewhat centralized and then gradually becomes more decentralized over the time. You see this in many cases. You saw with the Bitcoin supply. I mean, the supply of Bitcoin was pretty centralized early on, but it's become more distributed over time. The network was pretty centralized at the beginning with the number of nodes, but the more people have run nodes over time because of incentives, all that type of stuff, and it's become more decentralized over time. Same thing with the Ethereum network, right? More centralized at the beginning, and we had a lot of time for the Ethereum supply to distribute among lots of different addresses, okay, change hands. The network has become more decentralized. It's got way more community control in terms of development with the Ethereum core development, all that type of stuff, right? So we're seeing that on a layer one blockchain level with cryptocurrencies, with the blockchains themselves, and you're also seeing it with decentralized applications or dApps. So a lot of DeFi applications are kind of DeFi in name only. They're pretty centralized, especially in the beginning, but that makes it easier. So like at the beginning, like when you have, people, YOLOing funds in here, if there's a bug, like you might upgrade the smart contract with central control to fix those bugs, right? I realize it's a two-way street because there's some trust involved and people might, rug you. It might pull your money away from you. That's a risk a lot of people take. But here's the thing. You can, as you build software and technology that becomes more robust over time, you can start to remove the centralization from it and become more decentralized. Now, I realize there's still a lot of trust in projects to actually do that. Like I said, maybe they never, remove the centralization and then they just go decentralization. But even those cases, because it's built on blockchain, you still have the benefit of transparency, even if it's not fully decentralized. Okay. Now, I know I'm taking a kind of a long time to make this point, but all this is pretty important to see, which is that next step for those dApps in many cases, and this is becoming kind of the playbook, is to turn into a DAO, or a decentralized autonomous organization. Well, now you become a set of smart contracts that's like an organization that runs kind of like a company with shareholders, and you airdrop a token to give to people who have used it, who you want to govern the platform. The whole idea is your users, your early loyal users, are the ones that have the most skin in the game, the active users, and they're the ones that actually care about how the product works. So that's who we're going to give tokens. We're not just going to airdrop them randomly to just like wallets across the blockchain and hope the price increases. It's like, well, the token actually has a utility besides just number go up. But the utility is actually what can help make the number go up long term. So anyways, that's a pattern we're seeing play out. That's why I think we'll see more airdrops. But taking that thread of thought to this next step, which is DAOs and what they can do and why there's actually an incentive beyond just airdropping a token and number go up and decentralizing and becoming a DAO, you can potentially do more with DAOs long term, okay? So we started to see, what I would just call experimental legislation, for lack of a better word. I don't really have a strong legal background, but if there's any lawyers watching this, channel or policymakers, and you can, give me a better term to fit this. But basically, what I mean is, what I would call like progressive legislation. I don't necessarily mean in terms of like political leaning, but like progressive as in like just very new, very cutting edge. Legislation at very local levels, small levels, where we see like, DAOs recognized as having a lot of the same rights as like LLCs, or be able to like operate as an LLC, limited liability company, corporation. And so they could do stuff potentially like own property, own physical assets, not just crypto, okay? And so that's really another interesting feature of these projects decentralizing and becoming this. Okay, and then those assets are actually governed by token holders, all right? Not just like the people who made the app, right? So a DAO is trying to buy a rare print of the U.S. Constitution, all right? So, I mean, this is kind of a funny example of what I'm talking about. I mean, maybe this is actually a bigger deal than I'm making it out to be just by, browsing over the story. But basically, a quickly organized group of people are raising funds to bid on a surviving rare copy of the U.S. Constitution that's about to be up for auction. The project's members are in talks with auction house operator Sotheby's and crypto exchange FTX to try to make this happen. All right. So this doesn't look like a DAO that was created from the life cycle that I was talking about of like a app popping up, getting users, airdropping a token, becoming a DAO, and then acquiring assets. But you can create DAOs through other means. But there's still sort of this playbook that's being written and is starting to be acquired and used over and over and over again, that we're starting to see with multiple applications that are doing this. And besides just airdropping a token, it starts to create interesting dynamics for what we can do with blockchain over the long term, like operate as real companies governed by token holders in the real world. And now we're at the beginning of those things. It could be some time before that legislation actually is adopted at a much higher level, maybe like the federal level, for example. I don't exactly know how each of these laws. I mean, usually LLCs operate at a state level, from my understanding. It's usually when you start to get to like, I'm not really an accountant, not really a tax lawyer by any stretch of imagination, but it's usually when you go from like LLCs to like S corps, when you start to go to the federal level, or like C corps and stuff like that. So maybe LLCs are only state level. But anyways, who knows? If somebody knows, down in the comment section below, I would love clarification on that point. Somebody says Wyoming is leading the way in offering DAOs. Yes, definitely. Wyoming is the state that I was referring to earlier. Somebody says loop ring bag. No, loop ring is not bad. Somebody says yes, LLC is state. Yeah. I mean, I know you file LLCs at the state level, but I think, yeah, I generally think they're not even recognized at a federal level until you make an election beyond. Yeah, S corp is a tax classification. Yeah, like I said, I'm a little outside my lane here when dealing with how you recognize stuff at different levels. Yeah, I would love to have a conversation with somebody on the channel who has a pretty strong legal framework for understanding all this stuff and how it applies to DAOs. I mean, it's such a brand new world. So, like I said, I don't pretend to be an expert in this particular area. I'm just kind of connecting the dots on what could happen. All right, so somebody asked me about a certain L2 application and is it bad in the chat? Somebody about loop ring. No, loop ring's not bad. But I did get a question on the Twitter this morning, so we started doing this new thing where I kind of put a tweet in the morning before we go live and say, what are some things you want to talk about in the stream today? It's a good way to get feedback from you all, get the conversation going, maybe consider some things that I haven't thought about. And one of the questions I got was, how do you use an L2? So let me just pull this on my screen here. Hold on a second here. Okay. So I want to pull this up. So I got a question about how do you use, hold on a second here. Just want to make sure I don't have issues. Okay, so basically, well, let's talk about what a layer 2 scaling solution is in the first place. Somebody says how to use L2s. Basically, that stands for layer 2. So basically, like, a layer 2 is essentially how you make Ethereum faster and cheaper to use today. So a lot of people think, like, hey, we have to wait for Ethereum 2.0 to come out for Ethereum's gas fee problem to get fixed, make Ethereum cheaper to use faster. No, basically, we're fixing that now with layer 2 scaling solutions, and we'll have these for the long term, even when we move to Ethereum 2.0. So somebody's asked me, how do you use one in the first place? Well, basically, it's this second environment that you use to, like, make transactions on, and those get settled back on the blockchain. We get lots of examples like Arbitrum, Optimism are some of the main ones that are live now that are gaining adoption. So these are general purpose layer 2s where any developer can essentially move their applications over to it with minimal code changes. So how do you as a user actually get over to one? Well, basically, there's a couple ways. Right now, the prevailing way is to essentially use a bridge. So I got the Arbitrum bridge pulled up here. This is bridge.arbitrum.1. So essentially, if you're going to excuse me, use a layer 2, you have to bridge your funds over to it. And this is the most common way. Now, you have to pay a gas fee to do this. It's expensive to get on the first time. And you need to pay transactions, with cryptocurrency on layer 2s. So the beauty of, like, Optimism and Arbitrum is you're paying those gas fees in ETH, so you just have to bridge your ETH over. So basically, what you do is you go to a bridge website like this, you put in, your how much tokens you want to transfer. It's kind of like an exchange. It's like you're swapping over to the bridge, all right? And then you connect your MetaMask, click deposit, and you're over there. Now, definitely don't do this with a significant amount of money if this is your first time. You have to be very careful. Bridges are new technology. There's definitely risks associated with all this stuff, all right? And, even the layer 2s themselves are still early. So always exercise caution when doing something like this. Now, a lot of people are going to look at this and say, hey, it's still expensive to get on layer 2. So now what is one potential solution to this over the long term besides just these bridges? Well, one is centralized exchange withdrawals onto L2. Now, some people bristle at that idea and say, hey, these are centralized solutions in terms of the actual exchanges themselves, but the vast majority of people enter into the crypto space through exchanges in the first place. So, for talking about onboarding, so if you were to buy ETH, for example, and you wanted to use it on chain with your wallet on layer 2, you could just buy the ETH, and then when you withdraw, you could say, hey, where do you want to withdraw to? Do you want to withdraw to, Ethereum layer 1? Do you want to withdraw to Arbitrum? You want to withdraw to Optimism? You want to withdraw to ZK Sync? Any of these layer 2s that eventually become live and start to gain adoption, like what do you want to do? So that's another way to do it. The other beauty of layer 2s is like your wallet works the exact same as it does on layer 1. So if you have a MetaMask wallet, you just change networks onto that L2. You got to look up how to connect to that L2. They've usually got instructions on their website, and then it'll just show you like the RPC endpoint and how to enter in all the details, and then you're good to go. So when it says use a significant amount of money or else you will lose most to fees and get stuck. Guess it depends on what you mean significant. So you have to balance that for sure. You have to use enough to pay the fees and move around. But I would not highly recommend not doing this with your life savings. Somebody says Dapp World is stuck in gas fees. So this is a growing pain for sure right now in the blockchain space. Part of it's network demand, part of it's price increase in cryptocurrencies like Ethereum itself. This is a problem that will not last forever, especially as layer 2s become more widely adopted. When we have competition with other blockchains as well. Lots of other competitors popping up to take some of that market share. So there's good pressure in all fronts. There's demand side pressure, there's competition. In my mind, there's no scenario where this doesn't get better. It's just not going to happen instantly. Technology, on one hand, like moves fast, on the other hand, it doesn't move fast. Like, it doesn't happen overnight. But when you look back on, 1-2 year timelines, it moves insanely fast, especially compared to any other technology in all recorded history. Okay, so somebody asked about Bitcoin Taproot, so I'll go ahead and talk about that real quick. Then we'll go ahead and sign up for today. So I did see the Bitcoin Taproot upgrade has been activated. Okay, so I made a video about Bitcoin Taproot a while back. So basically, basically what the upgrade's done is have some new, trying to think of a good way to summarize it. Basically, some new potential for Bitcoin that's going to enable more privacy, security, and programmability, okay, for the blockchain itself to potentially offer some more advanced use cases. So the upgrade went live when the Bitcoin blockchain reached this block number at this time on Sunday, all right, which was mined and replayed by F2 Pool. Okay. So this is the biggest upgrade that's happened pretty much in Bitcoin, I would say in the entire history of the network. Definitely, I mean, SegWit was the last major one. I would say Taproot's probably a bigger deal. I mean, there probably might be, disagree with that, but that's okay. I'm trying to think of what else is relevant here. Yeah, you have to go check that video I did a while back about Bitcoin Taproot if you want more advanced details on exactly what's happening in the network. I mean, the other big thing to realize here is that it was you know, we didn't have any like major resistance to this going live, and it's a pretty smooth transition. That's always a kind of a miraculous thing to see, that decentralized process works. Okay, that's another big factor here. All right, everybody, that's all I got for me. That's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so that more people can learn about blockchain. And if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? Well, you go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can show you become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching Dapp University.